Here's your Chapter 5 example. There's the information that's given to you in the problem setup, and we're going to prepare a statement of cash flows. So we've taken the information from the statement of financial position. I just did a few little things to adjust it into Excel. So what I did was basically I changed the format in the change column, and I moved over the increase or decrease. This way everything in the change column is listed as a mathematical item. And then I just made the change thing, the delta, really the difference between the ending and the beginning. And when we get to do this again later in the year, I'm going to give you a really good shortcut that's going to tell you to automatically put things as an increase or decrease and in the proper positive or negative setup. But for now, I just want to mention a concept. When we're talking about accounts receivable, in here, accounts receivable increased by $18,000. When accounts receivable increased, that's cash not collected. So in the statement of cash flows, we're dealing with the indirect method here, and we start with net income. But accounts receivable goes up because of cash not collected. So an increase in receivable actually decreases the amount of money we have received in cash relative to the net income. So we're going to go through this again a little bit later, but just to set up the problem, I wanted to let you know this is what we're dealing with, and you need to be able to handle some of these topics right away. The next thing I want you to do is just set up the initial statement of cash flows, just the format in itself. And I'm going to give that to you in a second. It's going to pop up on the screen. I just want you setting this up in Excel, and then we're going to copy numbers over and take care of it. So now I've made the statement of financial position information smaller, and I set up the statement of cash flows. I suggest you stop the slide and in your Excel set up the format just as seen here. And little by little, we're going to take care of this information. We first start with the cash flows from operating activities. This is the indirect method. And like I said, we're going to talk more about the different methods later. FASB actually prefers the direct method, and banks do, but most of the companies in the U.S. use the indirect method. So we got people arguing over what kind of things we do, and the same thing in the international standards. But we're first going to start with net income. So we end up with this net income of $34,000. I'm going to put it right there. Oops, I'm sorry. Need to put this down. Equivalent to net income of $34,000. Now pay attention to the fact that the statement of cash flows is actually in thousands. This is what's the information given to you. The second thing coming down, we're going to talk about depreciation. And when we get to this later, I'm going to tell you that what we need to do is make sure we take care of everything on the balance sheet. But for right now, I want you to get the idea of what happens here. So we have net income of $34,000, net cash provided by operating activities. In essence, we have income. Let's just pretend, just as an aside, that we have income or gross profit of $30,000. And then we subtract out depreciation of $6,000. That gives us net income of $24,000. But the $24,000 isn't the cash we receive because the depreciation didn't cost us any money. The cash we received is actually back up here. So what we need to do is we need to add what we've already deducted. Since we deducted depreciation, we're going to add that back. So what we need to do here in the statement of cash flows is that same thing. We're going to go ahead and add depreciation. When you read the problem carefully, it tells you that new equipment was purchased and none was sold. So therefore, the amount right here, an increase in accumulated depreciation has to be depreciation expense. Now, this would be a different story if we had assets bought and sold, or assets sold, but we didn't. So we know that $6,000 is depreciation. Then the next line is an increase in accounts payable. That's just simply listed here. So we have 5,000. We have an increase in accounts receivable, which is here, but I already told you an increase in accounts receivable is really a reduction in the cash. So I'm going to mark that as a negative of $18,000. These items total a negative $7,000, and that gives net cash provided by operating activities $27,000. Continuing on, we're into the investment section. We've got a purchase of equipment for $15,000. If you think about it, an increase in accounts receivable is an increase in an asset, and we showed that as a negative. An increase in equipment is going to be a negative in cash as well. But it makes sense. We spent money on our investment in equipment. So our purchase of equipment is going to be $15,000, but we're going to mark that as negative because we spent the cash. We don't have other items in investing, otherwise we would put them in the left column and total them and say total cash provided or total cash used by investing activities, but it's simply not here. So we're going to move down to the financing activity section. Stock was issued for $20,000. That's the change in share capital ordinary. If an increase in assets which have a debit balance are shown as a decrease in the statement of cash flows, then an increase in the items that have a credit balance, such as liabilities and owner's equity, ought to stay positive because they're going to have the opposite side effect. So issuance of ordinary shares of 20,000 is going to be a positive number. But we have a payment of dividends, and this should absolutely make sense that the amount of money we paid as dividends decreased our cash, and so that should be negative. And this should really kind of confirm what you were thinking. Dividends have a debit balance. The balance went from 0 to 23, so it was an increase in the balance. So therefore, increases in debit accounts are negatives on the statement of cash flow. And that works here as well. When we put the items here, we have net cash used by financing activities. $3,000 was used versus provided by. And that's a terminology thing. Net cash used when we use more than we have taken, and net cash provided by when we have more cash in than cash out. So far we've got $27,000 provided by operating activities, $15,000 used by investing activities, even though it was one activity, and $3,000 used by financing activities. That gives a total increase in cash of $9,000. We go back to the amount of cash listed right up there on the statement of financial position, and the beginning balance of $13,000. That gives us an ending balance in cash of $22,000. We need a double underline. This is what the final product looks like. I want to show you a few things. You don't usually have the grid lines, but I left them there because they're in Excel, and I really want you to do the same so you can see what columns. There are some things that happen that are a little more formal. So, for example, you indent really all the items that are not part of the net cash. So we have cash from operating, cash from investing, and cash from financing. Kind of want to use those separately, so that's a nice thing about it. It's visually appealing. I didn't do that just because I want you to just get used to Excel. You can worry about that formatting a little bit later. I'm not as worried about it. But what I am concerned about is you understand a few things about dollar signs. I haven't been using a lot of dollar signs because we've been dealing with a lot of different currency. We've been using some yen and some euros and some pounds. I kind of want to let that be. But for here, I just want to show you a few little things that happen. At the top of each column is always a dollar sign. Your final product is always a dollar sign and a double underline. We use certain columns inside versus outside. At the top level, it doesn't always matter if they're inside or outside, because people always make the mathematical thing of we add or subtract as we go down. And that's fine, but once we get to this section, we need those internal columns. We've got the cash from operating activities here, cash from investing here. Now, if there were more items, they would be inside and we'd have a total that carried out. And then we want to have cash from financing activities. The statement of cash flows has 3 different characteristics: operating, investing, and financing, and we need to make sure that they are separate and distinct and the user knows them. While the purpose of the cash flow is kind of right here to show the net increase in cash, we're tying it to a financial statement, so we really need to make sure that we tie it to the cash balance at the end of the year. That's why we start with the beginning, end with the ending, and have the double underline that's here. That's the end of your problem. Let me know if you've got any questions.